Hello everyone. I am Takashi Miyashita, President and CEO of One Career. Thank you for joining us today. I will now present our financial results. First, let me explain our mission. We aim to create as many careers as there are people. For most people, work is where they invest the majority of their time in life. However, it is really difficult to find data helping with the selection of one's work. We believe the core challenge is the lack of such data. We are committed to revolutionizing the recruitment market in an ever-diversifying society by embracing the careers of all individuals and unifying career data. I'd like to start by walking you through the revisions to our full-year consolidated forecast. We have revised our full-year consolidated forecast upward for FY 2026 for both net sales and operating income. For net sales, by consolidating Kids Corporation's fourth quarter results, we have increased our forecast by 500 million yen from our previous forecast, bringing our new projection to 11 billion yen. Regarding operating income, while the inclusion of Kids Corporation will reduce operating income by 70 million yen, strong performance in One Career's core business is expected to generate an upside of 170 million yen. As a result, we have raised our operating income target by 100 million yen from our previous forecast, targeting 3.1 billion yen. Please note that Kids Corporation's business experiences seasonal concentration, with net sales and operating income heavily weighted towards the second quarter. Because this fiscal year only includes its fourth quarter results and accounts for goodwill amortization, we project a negative impact on operating income from this consolidation in the fourth quarter. The deemed acquisition date is scheduled for September 30th, 2026, the end of the third quarter. Consequently, we will consolidate only the balance sheet in the third quarter and begin consolidating the income statement starting from the fourth quarter. Next, I'd like to explain the revision to our dividend forecast. Following the upward revision to our full-year earnings outlook, we have increased our year-end dividend forecast from 34 yen to 35 yen per share. Our core policy is to maintain stable and continuous dividend payouts, with a target consolidated payout ratio of around 30%. Going forward, while prioritizing investments for growth, we will continue to ensure stable and consistent returns to shareholders based on our overall performance and financial position. And now let's walk through our financial highlights. First, let's look at our executive summary. I will walk through the details in the following slides, but during the second quarter, both revenue and earnings progressed smoothly against our full-year forecast. Net sales reached 5,809 million yen, up 44.8% year-over-year, while operating income landed at 2,372 million yen, up 73.9% year-over-year. Our KPIs are also making strong progress. Driven by significant growth in new client acquisition, our cumulative corporate client base reached 7,496, a 44% increase year-over-year. Our user base continues to expand smoothly as well, with total cumulative members reaching 2.583 million, up by 411,000 year-over-year. Additionally, as mentioned at the beginning of the presentation, we have revised both our full-year earnings forecast and our dividend forecast. On top of that, One Career ranked number 2 overall and number 1 in 2 individual categories in the GMO Customer Satisfaction Ranking Survey targeted at student users. We have also steadily executed key initiatives in line with our business strategy, including One Career, Tenshoku surpassing 200,000 cumulative members and completing the acquisition of Kids Corporation. Here is our consolidated P&L. Both net sales and operating income continue to grow steadily, and we remain on track toward our full-year forecast. Here is our consolidated balance sheet. Supported by our solid performance, we continue to maintain a strong cash position and a healthy equity ratio. Here is our quarterly revenue, EBITDA, and operating income trend. Second quarter net sales landed at 3,603 million yen, up 43.3% year-over-year, driven by strong growth in job postings and scout services. EBITDA reached 1,789 million yen, up 66.4% year-over-year. Operating income reached 1,709 million yen, up 65.4% year-over-year. Here is our operating income bridge. By optimizing investment efficiency across cost of goods sold and G&A expenses, we continue to deliver high operating profitability. Here is a summary of our operating expenses. While ramping up investments in organizational scaling, we continue to drive growth by striking the right balance between revenue and operating profitability. Here is our headcount trend. While actively driving productivity improvements for our recent hires, we continue to secure the talent needed to sustain long-term business growth. As of the end of June 2026, our consolidated headcount reached 343 team members. By the end of December 2026, we project total headcount to reach approximately 510. Here is our cumulative corporate client trend. We have steadily acquired new client companies growing at a strong pace of 44.0% year over year to reach a total of 7,496 cumulative clients. Here is the subscriber trend for our new graduate service. Our core platform, One Career, continues to maintain strong engagement, with roughly 2/3 of all job-seeking university students using the service. Here are our latest operational highlights. First, in the GMO customer satisfaction ranking targeting student users, One Career earned second place overall. Furthermore, we ranked first in two specific categories, the Greater Tokyo area and students seeking major Japanese enterprises. Second, we hosted the presentation ceremony for our 8th annual One Career Job Hunt Review Awards 2026. Third, cumulative registered users for One Career Tenshoku, our career change platform for mid-career talent, surpassed 200,000. Finally, on July 31st, 2026, we officially completed the acquisition of Kids Corporation, which operates higher education guidance services for high school students. Here's an update on the acquisition of Kids Corporation. On July 31st, 2026, we completed the acquisition of Kids Corporation, a leading provider of higher education support for high school students, making them a consolidated subsidiary. With over 30 years of history, Kids Corporation brings a robust network of 5,000 educational institutions, spanning 3,500 high schools and 1,500 universities, junior colleges, and vocational schools. By further unlocking the value of Kids Corporation's strong school network and cross-leveraging our complementary client bases, we aim to drive maximum synergy across the entire group. Finally, I will explain our business plan. Here is our consolidated fiscal year 2026 outlook. Reflecting our updated forecast, we are targeting net sales of 11.0 billion yen, an operating income of 3.1 billion yen for FY2026. This represents a year-over-year increase of 45.2% in revenue and 45.7% in operating income. Here is our business focus for fiscal year 2026. This year we are concentrating on 3 core pillars. First, continuously enhancing the value of our core early career recruiting business. Second, driving revenue and operational synergies within our mid-career recruitment business. And third, successfully integrating our newly acquired subsidiaries into the group. We will steadily execute our key initiatives aligned with these guiding principles. Here are our midterm financial targets for fiscal year 2030. By FY30, we are targeting net sales of 35.0 billion yen and EBITDA of 10.0 billion yen. In terms of revenue breakdown, we aim to generate 30.0 billion yen from our early career recruiting business and 5.0 billion yen from our mid-career recruitment business. Additionally, on an annual basis, we are targeting an ROE of 25% or higher and an EBITDA margin of 25% or higher. Please note that these midterm targets do not include the financial impact of Kids Corporation. Here is our market growth potential. Both the early career and mid-career hiring markets continue to expand, offering significant long-term upside. Over the long term, we plan to leverage our proprietary career data to expand across the entire HR sector and into adjacent market opportunities. Here is our direction for business expansion. With AI integration as our core foundation, we plan to scale our business across 3 primary vectors: expanding our platform ecosystem, broadening our product offerings, and growing our corporate client base. Here is the growth potential for our early career recruiting business. While our student registration rate is high, our enterprise penetration and revenue capture rates remain relatively small, leaving massive headroom for future expansion. By fiscal year 2030, we aim to reach a cumulative total of 20,000 corporate clients and generate 30.0 billion yen in net sales from this segment. Here is how we create business synergy from early career to mid-career recruiting. By leveraging the strong user and corporate client base established in our early career business, we can transition users into our mid-career pipeline at virtually zero acquisition cost, continuously scaling our career data platform. Here is our approach to shareholder returns. Our primary focus is prioritizing growth investments to drive EPS growth, boosting total shareholder return (TSR) through long-term stock price appreciation. In parallel, our core capital allocation policy is to deliver stable, continuous returns through a target consolidated dividend payout ratio of 30%. That wraps up our financial presentation for this quarter. We look forward to driving steady growth throughout the remainder of the fiscal year. Thank you for your time and continued support.